But the problem is that the banks delivering this stuff into COMEX might have been trying to cover the price risk, but they can't cover the risk that it won't be delivered back to them at the end of the period. So, in other words, we are potentially looking at a huge, great default on the derivatives. Whether it's London derivatives, forwards, or whether it's options or whatever, there's going to be defaults. Yeah, it's an interesting story, and I'm glad you brought it up because no one else other than the ECB and me seem to have placed an emphasis on the fact that COMEX has become a delivery option. The stands for delivery are enormous. The rate at which they're running in this year so far is an elevated 1,500 tons a year. That is huge. It's a lot faster than in over the last 3 or 4 years following the pandemic. Well, the last 4 years combined was 2,100 tons.
Okay.
So what we're seeing, you're about right. What we're seeing, if you like, in this year, if you like, is 1,500 as opposed to roughly 2,000 over the last 4 years.
Okay.
So it is about 4 times the pace. Mm-hmm. The thing that generated this originally was the sudden realization on COMEX that they've got outstanding stands for delivery. And from what I understand, there might be quite a backlog of these stands for delivery because, when you talk to people, Rafi Faber was one guy who decided to test the system. And he bought one contract and stood for delivery, and he had a hell of a problem getting delivery. He really did. They did delayed. There's another guy who is a dealer for Sprott who took delivery of silver, or at least tried to. And I think that story is somewhere on Garter in one of their dispatches. It took him forever to get it. It really did. And there was excuse after excuse. He sort of thought, well, should we sue the deliverers for this? And, they took legal advice and decided not to. And I suspect, actually, that from Sprott's point of view, if they tried to sue, say, one of the big bullion banks, they'd probably be cut out of COMEX forever. So that I could see as a retaliatory action. You can't rub these guys up the wrong way. But nevertheless, there's probably a huge backlog of delivery. We just don't know. We don't know. But I think it's worth assuming that there is some backlog of delivery. So with the prospect of tariffs coming in, of course, a bullion bank operating on COMEX had the problem that they were potentially going to have to pay 25% more, including the tariffs, to ship the gold in to COMEX in order to deliver against those obligations. So basically what happened was that they jacked up the price of the futures, put a huge, great premium on the futures to create an arbitrage. Now, this sort of arbitrage always works. People will beg, borrow, and steal gold at one price to get the gain, if you like, on another price. Now, if you've got your own gold and you don't particularly care whether you've got it or not, then that's easy. The arbitrage is just a one-way, ticket. Basically, you sell it and they say, somebody's bidding me 20% more than market. Yeah, I'll take it. Bang. If, on the other hand, it is a genuine arbitrage and it's not your gold you're doing, but you're sourcing gold, say, from the Bank of England's vaults under, let's say, a lease agreement or something, or dealers in Zurich or wherever it might be, it's not your gold. What you're doing is you're taking this gold at one price and you're selling it into the market at another price. Are you going to get that gold back? Well, no, because it's all being used to satisfy the stands for delivery. But the ECB's point was that banks in the euro system, or the euro area more correctly, were covering the price risk by taking out derivatives. And I would guess that the price risk would be something like, sort of out of the money options or something like that. I mean, it depends how they see the risk, but there would have been, or dealing forward, whatever. I mean, you can match the liability through derivatives. There's so many ways in which you can do it. Okay. So that's why they reckon that the derivatives, outstanding derivatives, rose 58% compared with the period last year. This is a huge, great jump. But the problem is that the banks delivering this stuff into COMEX might have been trying to cover the price risk, but they can't cover the risk that it won't be delivered back to them at the end of the period. So, in other words, we are potentially looking at a huge, great default on the derivatives. Whether it's London derivatives, forwards, or whether it's options or whatever, there's going to be defaults by the look of it. What happened in the past is that the central banks, through leasing arrangements and the BIS through dealing and all the rest of it, would ensure that a squeeze on delivery in gold markets would be dealt with by, a supply, if you like, of more leasing, rehypothecation, and all the rest of it. So they would come to rescue the system, if you like, when it comes to the other side of the deal. But the problem is that central banks who have been quite happily leasing in order to get an income from what is otherwise an asset which earns them nothing for their reserves, they're now beginning to think, well, hold on a minute. If our gold is gone, do we really want to do any more leasing? And the answer to that is no. So as the leases expire, they're not going to get renewed. And I think this is a general problem. And it's something that the market doesn't really realize. Well, it's gone. It's gone. I mean, the question to be asked is who is actually standing for delivery on COMEX? Mm-hmm. And the only people it can possibly be are people who can't get bullion elsewhere and are using futures as the means of taking delivery. In other words, they will buy into a future and stand for delivery. That's the only way in which they can get it. So this suggests to me that what we're looking at is, say, the second and third tiers of central banks. We're looking at various sovereign wealth funds. And we're also looking, and this is all dealing on Globex, incidentally, we're also looking at, I think, some of the really wealthy Asian families. They also will be looking to take delivery of physical, because just the same as, I've been talking about the risks in the fiat currency credit system. I've been talking about this for a long time. And I find that people around the world are beginning to realize, yes, this is a problem. Mm-hmm. They're awakening to it. It's a slow process. But you have these, what I might call my fellow travelers, who have been increasing in terms of their demand for physical gold, really over the last 3 or 4 years. And then along comes President Trump. And guess what? They don't actually want to hold dollars anymore. They want to get out of dollars. And if they're getting out of dollars, they really don't want any other fiat currencies. And so consequently, they stand for delivery in increasing quantities of gold on COMEX. It's the only way they can get it. Because if they go to a Swiss refiner, for example, and say, I would like some gold, 2 tons or whatever, mm-hmm. The Swiss refiners say, well, join the queue. Absolutely. I mean, what we have is a demand which is in the millions of ounces, not the odd kilo bar. I mean, this is
tons
serious.
Literal tons of gold.
Absolutely,
rather than
Now, obviously, it's not just one entity standing for tons, but I mean, it's interesting that when you see the expiration of a contract, the quantity that's being stood for is really quite amazing. I mean, you're looking at sort of 10, 15, 20 tons on contract expiry. Now, these are significant amounts. Your problem is that if you go to, say, the London market and you try and buy gold there, I mean, yes, you can get some gold. Getting delivery, not necessarily quite so easy. But the other problem is that the way the fixing prices works, you find your order is front run by the bullion banks. This is not easy. And not only that, but, if you're operating from the depths of Asia somewhere, you may not be quite persona grata in London. So, I just don't know. We just don't know. We can only surmise that these stands for delivery are not the normal operators within the system who would then take the view, I have got a profit on my investment, so I'm perfectly prepared to sell it back into the market, say if gold rose to $4,000 or something. It's not that sort of business, in my view. And what this means is that I think what we had at the beginning of this year, when we saw the run literally on the Bank of England's vaults, we've seen only part one of the story. Part two of the story will be when various central banks decide not to renew their leases, and those who borrowed gold to sell it into COMEX find that they're not getting it back. This is really quite serious. So I think we're storing up huge, great problems. And it's not just gold, Tom. Also, it's exactly the same situation in silver. I mean, just look at the COMEX vault figures. I mean, they've gone right up through the roof. The gold warehouse numbers have dropped from the highs. I mean, I think it's sort of down, sort of a couple of million ounces or something. But it's hardly dropped at all in silver. So the squeeze is still on in silver. This is it's a very interesting situation.